Hello there, this is fairbinaryoptions.com. So let's write here on the screen where we are and what we do here. This is fairbinaryoptions.com, and today, being the last day in 2014, I would like to discuss the Euro US dollar as it is heading into a bearish closing for the year, for the day, for the month, for whatever. This Euro US dollar started in 2014, as this is the 4 hours chart, but it is zoomed out so that we can see as many candles as possible. This Euro US dollar started with a move lower from the almost 140 level here in May, with the ECB press conference, when the ECB stated that they are going to do anything in their power to avoid, let's say, deflationary conditions in Europe. And from that moment on, the market only moved to the downside. Now, it depends very much how you interpret this move here to the downside, because I would say it's no impulsive move. At least from my point of view, it's no impulsive move from here to here completed. I would say that we have, because of this channeling here, I would say that we have a corrective wave to the downside here only because of this channeling. So everything comes to one single point here, 1.25. Now, to the 1.25 level, normally that should be interpreted as the end of an X wave. That should be the end of a complex correction, the X wave. Now, if you look at this X wave here, X wave is the move that is channeling there, alright? So this move that is channeling here is the X wave. Now, after this X wave here, what we have is a triangle, even though it doesn't look like a triangle, but trust me, it is a triangle. A triangle has 5 legs, A, B, C, D, E, and it should go from here to the upside wave A in the form of a zigzag, then the B wave all the way down here, then the C wave, then the D wave, and then the E wave that goes all the way here, like this. Let me make it of a different color. Let's make it red in order for you to actually see the triangle. Now, any triangle travels within the A and C and B2D trend line, so this one should be no different. And this would be the X wave, like we said. And then this is the triangle that goes wave A to the upside, goes the B wave all the way here, goes the C wave to the upside as well, A, B, C, then the D wave, A, B, C, D, and then the E wave, of course, which actually comes here and even takes the highs in wave C, just in a, let's say, in a fashionable way, leaving people's stops to be taken. Now, any triangle, like mentioned earlier, it travels within the A and C and B to D trend line. This would be the A and C trend line. Let's make it bigger, and let's make it red, like this, the A and C trend line. And this should be the B to D trend line. And now, look where price it is staying here. The B to D trend line, and this is visible on the Euro, Great Britain pound as well. So if you go on the website and or on the YouTube channel and you look at the previous analysis as well, then you see that the B to D trend line actually has been broken, respecting all the rules, right? So respecting all the rules, it has been broken in right before Christmas, and all this week in holiday consolidation, we just spent or hoovered around the B2D trend line. Now, everybody's looking for a bounce because it is end of year trading and so on and so forth. I don't think that we're going to have any bounce. Now, you might say, all right, what is this triangle here ending? Well, it's a complex correction. I would say that this is a first wave that we have here. So this is a first wave. Then we have the whole second wave is all this structure here. It should be labeled as A, the first bounce there to B wave A, then the B wave, and the C wave all the way to the upside, A, B, C, A, B, C, X, A, B, C, D, E. Normally, this should be a second wave in the form of a double three running complex correction. Now, if this is the second wave of a bigger degree, then what was prior to the second wave can only be a first wave. If it is a first wave, then it should be placed here. So a simple correction for the first correction here, A, B, C, X wave or intervening X wave, the move that is channeling to L, then a contracting triangle. Everything should happen now below the 0 to 2 trend line, like this, as this should be an impulsive move to go 161.8 extension. In this arrangement, in this scenario, Euro US dollar should travel 1.1780 without breaking this line. Now you tell me what to want to do, because the B2D trend line is only being broken. So I would like to buy put options, and I would like to buy put options, and for the expiration date, try to use an expiration date that goes into the 22nd of January, when the ECB is meeting with the first meeting in 2015. So 1 week earlier, so something like for the middle of January. So that would be 2 weeks expiration date. A lot of brokers are offering this now, so make sure you try to avoid short expiration dates. So let's write here on the screen that I'm buying put options with 2 weeks expiration date. So that would be something like middle of January if you want. Thank you very much for being here. It's buynovyoptions.com. We just built a bearish scenario on the Euro US dollar, on the fact that this triangle here is at the B2D trend line, so it should move even lower. Thank you and bye bye.